lineup coming up next. PNB Housing reported its first quarter FY21 results with a net profit decline of 9.5%. Neeraj Vyas, the MD and CEO of the company, is actually now joining in to break down the numbers for us. Mr. Vyas, can you start by telling us, first of all, what the position is like with respect to the moratorium? How many customers paid? How many have taken the moratorium?
Yeah, good morning. If you see our figure, we had declared in the first earnings call also. Moratorium 1 was 56 and 49. The moratorium 2 has been 39 and 29. And the good thing is that those who have not taken moratorium 2, that had taken moratorium 1, the collection efficiency is very good. So whatever apprehensions we were having, of course, in September it would be another round when people would come out of the moratorium 2. But those people have come out of moratorium 1, the collection efficiency is very good there, 95 plus. So I hope that things will be all right. We are individually interacting with the customers, but it appears so far it appears very good.
Okay, so just to understand, you're saying moratorium is at 39% of the book, right? The phase 2. Now, as of now, this quarter, GNPA doesn't really matter. I mean, looking at it for any lender, because the real test of GNPA will happen once the moratorium ends. And we don't know if there'll be a restructuring scheme or not that comes up. But as of now, is there any indication you can give us? I mean, tell us more about the slippages that you saw in this quarter. What is the projection or some sort of guidance you can give us for the coming months?
Yeah, you are right that this part of the entire book was under moratorium, so there is no issue on the NPA. Yeah. But if you see our result for the quarter ended March or financial year ended FY20, most of the problems we have taken care of, and that is the reason this quarter, while there is no need to make an additional provision, we have tried to build some cushion in the balance sheet that going forward if some kind of thing is there, the cushion is available. If you see our moratorium has been made up by not moratorium, the provision has been given at 71 crore, which of course we could have gone without that also, but we wanted to build some cushion in our balance sheet and strengthen the balance sheet. That was the reason. Going forward, I'll tell you about the NP one, both the side differently. Retail, as I mentioned, that collection efficiency has improved. Not only overall collection efficiency is 98 plus as I talked to you today, but even in the accounts where the moratorium 1 was taken and moratorium 2 was not taken, the collection efficiency is 95 plus. So I don't find major issue as far as retail is concerned. We should be able to control the retail book. We have taken a few steps like educating the customer, a civil education scheme where the customers are being educated through SMS and emails that in case they default, their civil score will go down and it might result in their inability to raise funds in future. That is one. Some artificial intelligence based third party vendor has been engaged who would be making calls to these customers, those who are under moratorium, to ensure that they do not slip on their payment when it comes in the month of March. In addition to that, we have a very strong collection team and we have provided some kind of incentives also to the collection team, which will be rolled out in this month, so that this month is September when the moratorium gets lifted. So there is also additional incentive available to go extra mile for the company, so that we do not have any issue as far as the retail book is concerned. As far as moratorium on the construction book is concerned, let me give you a flavor of my overall book, which is given for the construction. We have something around 10,000 crore outstanding on construction book, with out of that around 60%, as of today it is around 58%, which is under moratorium. Now out of that 58%, the major risk is the completion of the project. So if you go to the bottom pack of that list, less than 50% completion is roughly 3,400. So revenue is more than 50%. So out of the 3,400 also 1,000 crore is an NPA, and we have classified as an NPA, provided for adequately on that. Out of removing 2,400, 2,200 is zero DPD cases. So the track record is very good. And overall book of 10,000 crore, if I talk to you, 85% of that book is zero DPD cases before moratorium. Of course, they have taken moratorium for interest and principal both, but going by the track record and the collection that we saw, whatever nominal collection came during the month of April, May, June, indicates that there is a demand there in mass housing segment. They will not face problem of cash flows, and people who are under construction, it also does not show any signs so far. But because construction industry has been suffering from problem for the last 3 years, we have taken some proactive measures, and last 145 days we have created a special group, remedial management group. Their job is to take care of these projects which are less than 50%.
Okay, sir, allow me to come in. We're a little short on time, so if we could get in some more questions. So from what you say, I gather that you're not too overly worried about slippages and NPAs, even when the moratoriums end. So now let's talk about the asset side in terms of growth. You mentioned inquiries are picking up. Can you give us some sense? Collections are fine. Now, what is happening with respect to demand for loans? What kind of a loan book growth do you envisage now that unlock is here and we're coming out of the lockdowns?
Yeah, okay. I think we had given a press release also. We are looking only for the retail book to grow because we are not going into corporate book till we take the action of recovery and all that. But as far as today the board is concerned, it's very clear that corporate finance we are not going to do, except for the uncommitted lines where we are committed for loan and where we have to make disbursement provided the projects are on track. About the retail, we plan to disburse 13,000 crore during the year. 75% incremental of that disbursement would be to housing loan and 25 for the lab book. This is the plan for disbursement, and going by the feelers which are coming from the branches, I'm very hopeful that not only will achieve the 13, we'll cross it as well.
Okay, so 13,000 crores of, I don't have your corresponding figure for the last year, so that would be how much of a growth, loan growth?
Last year we had grown at 18,000 crores, 17,000 in retail and 1,200 in corporate.
So as a percentage, the growth this year would be how much on the loan book?
The percentage of growth will be, I think it will be muted growth because we will have the runoff as well.
So that's what I was wondering.
It will remain at the same level as we open the year because there will be runoff and closure as well. But as I told you, this 13,000 crore when we planned, it was planned October onward that we will be picking up disbursement of say 1,500 onwards. Okay. But going by the trends today, I feel that it is not October, maybe August itself probably will cross 1,000 crore mark.
Okay, all right.
This is in mass housing, not in premium segment. It is in mass housing.
In the mass housing, yeah. This corresponds to the kind of inputs we're picking up from other stakeholders in the industry as well. Right. That it's mass housing where the interest is coming in, because obviously work from home is a new reality. So the focus is on the home, not on the office. Thanks very much, sir, for joining in and giving us some color on your numbers and the trends over there. We do have to take a very quick break. Back with more in just a moment.